Hey everyone, thanks for tuning in. I'm very excited to have Angel Vieira with me today on the video call, and he is with Arcadia Settlements, and he does something very interesting. I came across him on one of my favorite social media platforms, LinkedIn, and he said, do you know about structured installment sales and how they can be used to help your clients avoid or defer paying capital gains tax on the sale of their homes? And I was like, Angel, tell me more. So we agreed to have a conversation, and this is the conversation. We're going to do it live right here on a video call, and I'm very excited to learn along with all of you about this wonderful tool. So, Angel, thank you so much for being on the call today.
Yeah, thank you very much for having me, Seb, and it's a pleasure meeting you.
All right. So first off, Arcadia Settlements. Can you give us an introduction to what Arcadia Settlements is and what you do there?
Yeah, so Arcadia Settlements, we're a structured settlement firm. We're a national firm. So typically what we do is we deal with structured settlements. So we're typically helping clients settle various claims on a tax-free basis. So we use annuities to generate these tax-free growth payments geared to that specific clientele. So, and there's roughly about 800 annuity companies in the country, and only 10 operate in our unique area. And then one of those annuity companies that also offers these tax-free growth annuities for physical injury and wrongful death is MetLife. And MetLife has introduced the structured installment sale that is specifically aimed at the sale of property and the sale of business that qualify under Section 453. And so some of those properties include a primary residence, commercial property, rental property. It could be vacant land or the sale of a business. So anything that typically qualifies under Section 453, we can take part of those sales proceeds and put it into a tax deferred annuity. And so not only are we deferring the tax, but by spreading those payments out over time, we can typically put the seller into a lower tax bracket so they'll pay less tax over time as well.
Right. That's terrific. So there's that commercial, J.G. Wentworth, blah, blah, blah.
Yeah.
So that's a structured settlement. Is that right? And so,
Well, what they do is they buy out the annuities that we set up, right? So they're
they buy
typically,
out the annuities you set up.
yeah, we set these annuities up, and a lot of these folks, they typically may forget over time that these payments are fixed, they're guaranteed, there's no management fees, and they're 100% tax free. So some of these types of companies that you describe will buy these future periodic payments out at a discount and give them a lump sum. And there's some concern about that because typically their attorneys have been involved in the original settlement. There's a court order that's been involved, and some of these folks that have been provided with cash up front, for one reason or another, they've run out of cash, and now they're looking to liquidate part of these annuity payments. But again, once we educate them and remind them that they're tax free, and we've all got monthly bills to deal with, so these payments continue to be made on time. So those are separate companies, and they don't set up structured settlement annuities like we do.
Okay, and you know what? I think a lot of our viewers here may not have the foggiest notion what is an annuity. So
Yeah,
maybe
right.
you could tell us what an annuity is exactly.
Yeah, I appreciate the question. I get that question more often than not because I deal with annuities every single day, and I might take it for granted. So what a fixed annuity, the annuities we deal with specifically, is we take a lump sum of money. It could be with a typical structured settlement, you've got a claim that you've settled and you're coming into money. But if we're looking at the structured installment sale and somebody sells a property and says, look, I want to take a portion of that in cash and I want to take another portion of that and defer. I don't want to pay it the tax on it now. I want to defer it. We take that lump sum at sale and we have escrow fund that lump sum directly to the annuity company to make sure there's no constructive receipt. Now, that lump sum of payment is going to generate a total of larger payments over time, and we tailor make those annuity payments based on the needs of that specific seller. So we can generate payments anywhere from 3 years of guaranteed payments and all the way up to 40 years of guaranteed payments. And so every seller is unique, and we're approaching the seller and trying to find out, hey, seller, what is it you're trying to accomplish so we can best help you set up these annuities. And at a minimum, it's to educate these folks because some folks may say, hey, this is a great product, but it doesn't achieve what I'm trying to achieve. And maybe it might be, they may be looking at another tax deferred kind of a product. But again, we're just trying to get ahead of this because, as you know, once they have access to those sales proceeds and there's constructive receipt, I can't annuitize it any longer on a tax deferred basis. So we have to get pulled in before those proceeds are expended.
Right, but you can get an annuity without having like a large amount of money from the sale of a house, right? Like if you wanted to, if I had $100,000 laying around,
Yeah,
I could give an annuity company, which annuity company is always like a life insurance company. I mean,
that's correct.
annuities are tied up with life insurance companies.
Yeah, that's
What's the
correct.
relationship there between a life insurance company and an annuity?
So if you take an insurance company like MetLife, right? So they offer a variety of different financial products, and a lot of folks out there may or may not even be aware that some of their pension plans may be tied up with a MetLife, where they have these guaranteed payments over time. So with us, with these guaranteed annuities, you've got a strong financial institution. In the case of MetLife, it's been around over 150 some odd years. They're regulated by the departments of insurance from each state as well. So they're heavily regulated companies. They're required to have certain reserves up as well, um, to make these annuity payments as safe as possible. So in the realm that we work in with fixed annuities, they're conservative by default. And some people may say, well, give me the money, and if the market does X, I can do Y. Yeah, but if the market tanks, what you might lose money. So with our fixed annuities, you can't lose any money. So you've got a guaranteed payment stream with a pretty competitive rate of return as well. And again, there's no management fee. So it's just giving folks another option to look at.
Okay, so let's just say that I had $100,000 to make it real easy, and I wanted to buy an annuity. And so I give you $100,000, and then let's say I want to get that paid out over 10 years. So like I would get more than $10,000 a year, right? Because
Absolutely.
there's like an interest rate that comes with that. Is that so? How much would I get? Would I get would I get like $12,000 a year, or not that much, or
Yeah,
how much would you get?
that's an excellent question. And typically I'd have to run the quote, but I've already taken the liberty. I've run quotes internally myself, and I'll give you an idea. But in this case, let me just use a scenario. If someone were to use $1 million to put it into an annuity, if the annuity payments would be over $18,000 a month over a 5 year period. So $1 million in would guarantee a payout of $1.1 million out. So there's always a guaranteed payout. If that $1 million were to generate a payment over 7 years, it would pay again over $1.1 million. And so again, so the longer we leave it in there, because of that interest component, it'll generate a larger payout. But what we're really trying to do is find out what the needs of the seller are, right? So we're saying, okay, so how much money will you have access to? How much of a guaranteed annuity payment are you looking for? And then we can tell them to the dollar what that's going to cost. So for example, a seller may come around and say, I'm selling my primary residence. I need $500,000 in cash because I need to pay off the first mortgage. I want to create a slush fund. I want to buy my kids a car. So I need that 500,000, and then the balance will put it into an annuity. And then what I do, people like myself do, we generate various scenarios so the sellers can look at that and discuss it with their tax expert to see what might benefit them best. So the payout will always be larger than the amount they put in there. But the beauty of the structured installment sale is not only that you're having guaranteed income, you're spreading out the sales proceeds over time, and get it, and so the annual taxable income is going to drop, right? Because we're going to spread it out over time, and that should allow many sellers to get into a lower tax bracket. So, for example, if someone was facing a 20% federal capital gains tax, and we spread that income out over time and lower the annual income, we can almost immediately get them from a 20% tax bracket into 15% tax bracket. And that can apply also maybe to state capital gains if it's applicable. And for those folks that are trying to avoid that net investment income tax, at $200,000 or whatever that is, again, we can tailor make those payments to be below those thresholds. But the reason we need these sellers to coordinate with their tax folks is because someone like myself, I don't know what other taxable income they have, right? So this is going to be a team effort of pulling this information together to see how we can most benefit that seller.
Okay, so for an annuity, okay, let's just say instead of 100,000, I put in 1 million. So annuity is not like an investment. It's really like a savings, right? So like you are guaranteed, no matter what the stock market does, you're gonna get whatever payment that you set up in your annuity every year, and there's essentially no risk to that. Is that correct?
Yeah, it really is no risk. The question comes up, what happens if the annuity company fails to make payment? Because typically annuity companies can't file bankruptcy, they go into liquidation. But really the seller needs to look at the financial strength of that company. And again, a MetLife's been around for 150 some odd years. And think about it, the annuity payment streams, the sweet spot, if I can use that term, is typically the age group is about age 75, because I've got seniors in a primary residence with a lot of equity that are looking to downsize and or move into an assisted living type facility, but that capital gains tax, they're like, no, I at this age, I don't want to pay that much tax, and I don't have an alternative, and I can't do a 1031. So this annuity can provide that option. And so each annuity payment consists of the return of basis, capital gains, and interest. So if the payout's going to be 10 years, it's going to be a fixed monthly payment. And then at the end of that 10-year period, that would be the end of all the payments. But if in my examples previously, if somebody chose that 10-year payout, it'd be $1 million in at $10,000 a month, and the guaranteed payout would be over $1.1 million. And at that point, it comes
So, yeah. So what is like a typical like on a fixed annuity? Like what's the typical like percent of return? Is it like 5%, 6, 7? What is that
today it's
typically?
averaging, it's about 5%. And if somebody wanted a shorter payout, 3 or 4 years, you're probably closer to 4.5%, give or take. And if you're on the longer end, we might be closer to 5.5, something to that effect. So that would be the internal rate of return on that specific annuity payment. So you have the benefit of the guaranteed steady income to do whatever you want to do. The deferral of capital gains, you pay less tax, but then you're making money on top of that as well.
Right. Okay. So that's a fixed annuity. Are there variable annuities too, where like there is some risk that you might lose principal, or there is no such
Not
thing
for this particular
as variable
product, there
annuities?
isn't. So
Not for this.
I've got
It's not for a
MetLife,
structured installment sale.
not for the installment sale, but so there's another smaller annuity company that's getting into this arena as well. So like with the MetLife, typically the minimum premium is $500,000, and they'll consider other lower options or lower amounts on a case by case basis. The newer annuity company that's coming into the space has a much lower threshold. And then for those that are really risk averse, we can use in many cases the U.S. government bonds as well, or treasury bonds, I should say.
Oh, that's interesting.
Yeah, so
Right. That's
but again,
interesting.
you're going to trade one for the other, so it's going to be ultra risk averse, but the rate of return on something like that's probably going to be less. But if you use someone like a MetLife that's been around 150 some odd years, and your annuity payment stream is for 7 years, what's your exposure? Your exposure is over the next 7 years, and that might be a concern. But if it is, we'll have that discussion and explain the pros and cons of something like that.
Right. Yeah. Okay. So, well, MetLife is a pretty solid company, but there's more than MetLife who does this, or is MetLife really the only game in town right now?
So MetLife is one of them. Puritan Life is the other annuity company that's in this space as well. So Puritan, they've been around for a little bit over 50 years as well. It's an annuity company that does this. And again, we can use U.S. Treasuries. Now, for some folks that want, for whatever reason, a much longer payout, anything over 20 years, then we do have access to using the likes of a BlackRock or Vanguard fund for those long, super long terms as well. So again, Seb, it's
Okay.
a matter of finding out who are the sellers, what are you trying to accomplish? Let's find out what products are available to meet your needs, and we may come back with a menu and say, here are some of the options you have. What are you most comfortable with?
Okay, so you said MetLife requires a minimum, initial payment of $500,000 into the annuity. How about Puritan? Do they also require $500,000?
Puritan, their minimum is $25,000.
Oh, well, that's a
Yeah,
lot
so
better.
there you go.
But I mean, most people are going to have hundreds of thousands of dollars because that's what
That's
they're looking
correct.
to shield. Okay, so this is kind of, I mean, not really exotic, but I think this is going to be news to a lot of people because we always hear like, oh, you can't get away from the capital gains when you sell your primary residence, but like here is a way, and it uses IRS Section 435, which a lot of people have heard of a 1031 exchange, which is IRS Section 1031. Can you explain what IRS Section 435 is?
So it's section 453. So section
Oh, sorry,
453,
453.
no worries. Section 453 deals specifically with the installment sale. And so technically what's happening at the end of the day is we're replacing the buyer with MetLife. So in a sales transaction, the buyer and the seller, they still agreed to whatever dollar amount they want for the sale. The buyer still takes title. I've had questions like, "Hey, does the annuity company need to go look at the property?" Absolutely not. They're not a party to the sale. Is there going to be a lien on the property? Absolutely not, right? So this product at the end of the day is really to benefit the seller. So what's happening is some sellers are saying, "Look, I really want this annuity. It makes sense for me. So let me educate the buyers. So when the buyer shows up and says, "Hey, I'm interested in this property," then the seller can educate them and say, "Yeah, well, I'm selling it under these conditions, and I want to use this product. So we're gonna ask you to please participate and fill out certain documentation so I, the seller, can take advantage of this product." So it's an educational process, and we will educate whoever we need to along the way.
Yeah, but I'm sorry. So what does Section 453 actually say? Like,
So it's an installment sale. So right, so that's where a buyer approaches the seller and says, "Look, I want to buy this property, but I'm gonna pay the whole amount now. So maybe I'm gonna give you $500,000 today, and then I'll give you $200,000 for the next 3 years on a deferred basis, right?" And so even in that scenario, the seller could take advantage of kind of spreading out that income and maybe having some of that tax deferral. If there's going to be a downside, I guess it would be that the downside to the seller would be that you have a buyer that for whatever reason stops making payment. Now you've got to evict them and try to get your property back. So some people take comfort in the fact that in this installment sale with MetLife as the payer, it's the annuity company that's going to pay you for the next 5 years, 10 years, or 20 years. So there's really a very limited, if any, risk of default in that scenario.
okay, so Section 453 is an IRS sanctioned way to take the proceeds of a sale of any asset, I guess, not just a house, and then have that paid out over time. And because there's no constructive receipt of those funds, you never take it into your own account. You haven't actually realized that gain. That money goes into an annuity, so it's transferred directly at close of escrow. Instead of going to your bank account, it goes into the annuity directly. So let's just say that you sold your house for $1.5 million dollars, and then you have a cost basis of $500,000,
Mm-hmm.
and then you have your capital gain exclusion because you're married of $500,000. So that means that you can take $500,000 tax free, right? Into your personal checking account. Plus, if you owe less than the $500,000 basis, the rest of that also goes to your checking account as well.
Yeah.
And then you can take that $500,000 left over and move it into an annuity and get as much cash tax free as you can, but then still have $500,000 essentially saved, or I mean, you can use the word invested or whatever, but saved into an annuity. Do I have that right? Is that correct?
Well, kind of, but let's clarify a couple of things. So under Section 453, it's going to have its limitations as to what type of assets can be sold and would qualify for Section 453 tax deferral. It's going to have those limitations. And in a scenario where somebody is going to take some lump sum of cash out front, my understanding is that a portion of that cash up front portion is still going to be subject to capital gains. So it's not a matter of, let me take my exclusion as cash and it's 100% tax free and only the balance is going to be subject to capital gains. There's going to be kind of a pro rata division of that. So a portion of that cash up front is still going to be subject to capital gains, even though we can take the balance of whatever they want to defer and give it to the annuity. Which is again why it's strongly recommended that these folks talk to their tax experts, tax or legal, and if they have any questions, we can have that discussion as well.
Oh, so that's interesting. So you lose some of your exclusion if you do a 453?
Yeah, I don't know if lose is the correct word, but you can't. They're not the. It's my understanding the IRS is not going to allow you to pick and choose and cherry pick and say, I want this portion to be 100% tax free. It's going to have to be spread out between the cash and the annuitized portion as well. But again, this is kind of where the seller needs to reach out to their tax person for that specific tax advice.
All right. And you're not a tax guy, and I'm not a tax guy. So talk to your tax guy.
Yeah.
So I'm going to talk to a tax guy and see about that as well. But okay, so what are some of the downsides to going with an annuity versus, I don't know, some other vehicles?
That's a great question. I mean, part of the downside for as long as I've been doing this is part of the downside is part of the upside. The annuities are fixed, they're guaranteed, but you can't change the payments. They have no cash value. So once you set these annuities up, they're pretty much locked in. So part of my due diligence as well is to make sure that the sellers understand you should have some bucket of liquid assets in the event you need the money for whatever reason. Because once you set these annuities up, what you're entitled to is those guaranteed payments, but there's no cash value. You can't pull money out of it. You can't take a loan against it. Technically, you can't assign those benefits to anyone else either. So it may not be for everyone. So it's just another alternative based on the needs of the seller. So if there's going to be a downside, I think it'll be that, but it has, and it offers a lot of upside as well.
Okay, well, let's just say I have a 10-year annuity, 5 years down the road, disaster strikes, and for whatever reason, I need the rest of the cash right away. Can you liquidate an annuity early and get that money somehow?
You
Or
cannot. You cannot. Now, if there's yeah, I don't even want to go down that route. You cannot. I mean, people run into hardships all the time, and that's why I'm saying we need to make sure that they have access to cash liquidity, and they understand that this is the type of annuity that they're getting into. So I don't know. Let's just say somebody needs hospitalization or something of that sort. What they do have are these guaranteed payments that can help pay some of these bills maybe on an ongoing basis because they won't have access to it, but hopefully they'll have access to or have insurance or something on the side that can help address that. So it's rare that we see where somebody takes those sales proceeds and say, hey, annuitize the entire thing. It's more typical to see someone say, look, I'm going to take some of that cash and maybe I'm going to park it here in a very conservative cash fund. I'm going to take another portion and play the market. I may lose money, but I might make money. And then you've got a diversification by using the annuity where you always have that base of guaranteed income that's coming in.
all right, well, is there any cost to set up an annuity to do a IRS 435?
There really
A
are
453, sorry.
453. There really are no costs. So I get paid a one-time commission when this is set up. And then my office and the company, we provide ongoing service. If 3 years down the road, somebody's changing to another state, wants to change their bank account or something to that effect, they'll either call my office or call the annuity company directly. So I get paid that commission one time up front, and there's no ongoing management fees. So remember, in my example, let's say if the monthly payments are $5,000 a month for 10 years guaranteed, it'll always be $5,000 a month, and it's never going to change. There's no management fees that are taken from that. So whatever annuity we lock in, that's exactly what you're entitled to. And then that's going to be followed up at the end by the seller getting a copy of an annuity contract that says, X annuity company promises to pay these payments, and now you have a contractual commitment with that annuity company.
Okay, so there's no cost, no out-of-pocket cost anyway to the seller for doing that. So like if they set up an annuity, I imagine there's some paperwork involved, and then for whatever reason the sale falls through, or they change their mind and don't want to get an annuity, there's still no cost.
There's no cost. There'll never be a cost. No one in this entire transaction will ever get a bill from me. And that's why, and again, going back to the claims that I've helped settle over the years, I think it's the right thing to do. You're just trying to make sure these folks make an informed decision. And because of the tax consequences of receiving these funds and having constructive receipt, that's one thing. But if they call me the next day and they want this tax deferred annuity, I can't do it any longer. So we're trying to get ahead of the curve and have people make an informed decision. So, if I've got 50 people that ask me for 50 quotes or 100 quotes, all the quotes are free. There's no commitment. And so again, if somebody's thinking of selling next week, next month, or next year, I tell them, I can run the quotes now. There's no commitment. It'll give you a better understanding. So you get a better feeling for what you want to do 3 months out, 5 months out. And then when you're ready to proceed and you think you want this annuity, then we'll update the quotes at that time. But again, there's no cost for these quotes. And I think it's a great idea just to have it, just to look at what the numbers look like. And then share them with your tax person and say, hey, what do you think about this? And there's a lot of tax folks out there now that have never even heard of this product because it's still relatively new. And then we provide them with all the information that we have to educate them as to how this product works.
Okay, and so when you do a 1031 exchange, there's like really nothing for the buyer to do. They agree to some language in the contract. What does the buyer need to do this Section 453?
Yeah, so that's an excellent question. So really what's happening is, so what we do is I set up the annuity payments and there's an annuity payment stream. And so we've got these annuity payments. So technically what we're doing is we're setting them up, we're putting it into documentation. So the way this is going to work is buyer and seller have already agreed to whatever that sales cost is going to be. That's never going to change, right? We're just going to then divide how house sells for $1 million. How are the funds going to be distributed? So I have to create these annuity payments, put them on paper. So technically what's going to happen, because it's under Section 453, the installment sale, the buyer is promising to make these future periodic payments to the seller as they normally would in an installment sale, but the buyer's assigning this obligation to the annuity company, and the annuity company is taking that obligation on. So that's just one of the documents that need to be completed as well. And then with the MetLifes, we have questionnaires, right? I have a questionnaire for the seller to make sure they understand how the product works, and more importantly, that they have liquid assets. And for the buyer as well, the annuity companies are wanting to make sure where's this money coming from, right? They want to make sure they're avoiding any type of funny money. And it's just part of the process. So what we do is say, look, if you're interested in it, these are the documents that need to be completed. And that's why we want to get ahead of it and educate any potential buyer up front as soon as we can, so we can educate them throughout this whole process. Because if at the end of the day you have a buyer that says, look, man, I just want to buy a property and be done with it, I don't want to get involved with any of this stuff, I can't make them do it, right? So so if that scenario comes up, there's nothing I can do about it. But I've had, the last one I had was in Florida, and it was an elderly couple selling their rental condominium. Now, Florida doesn't have state capital gains. And so with the help of their tax person, we were able to annuitize those payments on the sale of that condominium and get him into a 0% federal capital gains tax. But that seller said, oh, I'm not selling to anyone that doesn't agree to do this because I'm not paying that capital gains. And the first person that showed up said, I'm not worried about MetLife. I just signed off on it. They didn't even have any questions. But again, if anyone has any questions, ask them. I mean, I sleep better at night knowing, hey, look, if you had a question, let's address it. The product works a specific way. It's not magic, and it works for many people. And if it doesn't work for other people, well, then we've tried our best.
So you need to have the buyer basically sign, is it a form or is it 10 forms? I mean, like, is it super intimidating or is it just a quick, like, hey, just, initial here, sign here kind of thing?
It's going to be about four different forms. They're typically each one page long, but they accomplish different things. And so typically what I do is I'll reach out to the escrow folks and coordinate with them as well. I'll obtain as much information as I can, and then I coordinate with escrow. They help collect additional information to present it to the annuity company, because the annuity company still needs to review all of these before they accept them. So I've got to do my due diligence. They've got to do their internal due diligence, and once they accept it, then we can move forward.
Is there any way to, like, pre-approve your sale through the insurance company? Because, like, if you're planning to do this, you don't want to find out you can't do it for whatever reason, like, 3 weeks before escrow closes.
That's a great question. So typically, like today, I can run a variety of scenarios and share those numbers with my potential sellers. And they'll say, okay, this is great. Yeah, but I can't lock in, I can't commit to this annuity until at a minimum, the questionnaires from the buyer and the seller are completed and submitted to the annuity company. The annuity company, their due diligence is, we want to look at this stuff before we sign off and commit to something.
Okay, so you need to have both buyer and seller send the paperwork over to the annuity company. How long does it take for them to agree to make this happen?
24, 48 hours at tops. My portion, this annuity portion, we can get done within 2 to 3 days. Yeah, everything's done. They double
Right.
check
Okay.
everything. We lock in our annuity payments. I create all the documentation and send it out for signatures, and then we're pretty much done. Then it's just a matter of collecting the information.
Right. Okay. And so, have you ever seen the insurance company say, "Nope, sorry, not going to do it"? Or
Um, I have not seen it, but I have asked, and they've just to kind of give you an example is where somebody's actually selling a business, because that qualifies under Section 453, and then there's some sticky issues about whether it's a C corp or an S corp, but they want to retain voting rights and things. So that starts getting into some gray area that they're a little uncomfortable with. And if it gets too far out of Section 453, they'll say they don't think that's a good fit for that specific scenario. But in real estate, I've not really seen it. Yeah, I mean, it's pretty
okay. All
straightforward.
right.
I mean, where's the money coming from? It's either coming from a 1031 or the sale of something, or it's coming from a mortgage company that they're taking a loan. So I've not personally seen anything kind of crazy.
Right. Okay. Good to know. All right. Well, this is very interesting, and I think this is a really great strategy because around here in the Bay Area, I mean, you could be having $1 million in taxable gain easy, $2 million in taxable gain, $3 million in taxable gain easy, and so for some people, with that kind of money, who could be paying $1 million in tax, it's easy to see that. This is a
Yeah.
great strategy to look into, at least to defer that. So, Angel, what's the best way anybody could reach you if they want to talk to you about this?
Yeah, they can reach out to you and directly, or they can reach out to me directly. I don't know where my contact information may be. And again, the quotes are free. If somebody just wants to discuss a scenario, it doesn't cost you anything. You can just call my office and we can walk through it just to kind of give you a better sense as to what can and maybe cannot be done. But the product, it's
What's that
pretty
number to call
straightforward.
you?
Yeah, my phone number here at the office is area code 323-887-9200.
Is that an LA number?
That's an LA number. Yes, I'm in Southern California.
All right. God bless it. And is there a website which people can go to, or?
Um, yeah, well, as a matter of fact, I'll tell you what, you have my phone number. Anyone can
Yep.
also type in MetLife structured installment sale, and a slew of information will come up. They've got a white paper. So I've got access to all this information as well, but you'll have access to a lot of information, scenarios, videos as well. So they've got it set up really, really well. So they have a ton of information. And then if you want to get into more specifics, reach out to me directly and I can help you walk you through that or any questions anyone might have.
Well, who has time to read all those papers and
Yes,
watch all those videos? It sounds like the thing to do is just call you
just call
down there
me.
in Southern California.
I
All right,
appreciate
fair enough.
that.
All right, Angel. Well, thank you so much for being on the show today. I learned a lot, and I know this is going to be a real eye opener for a lot of my viewers.
Yeah, this is great. Seb, I appreciate the opportunity. Thank you again very much.